Welcome to Real Estate Live, where your questions get answered. We get to the point with the hot topics that everyone is talking about 3 times a week at 9 a.m. Pacific time on Monday, Wednesday, and Friday on YouTube and Facebook Live. I'm your host, Andrew Finney with King Realty Group in beautiful Las Vegas, Nevada. Today's hot topic is what's up with lenders not lending. To tell us more about why some lenders aren't providing home loans is Bill Marin with New American Funding. Bill will also give us the mortgage rates trend and the mortgage market updates for today. After the hot topic, we'll jump right into the live Q&A session, and joining us today as a special guest from Cheyenne, Wyoming, JP Fluellen with eXp Realty's Titan Real Estate team. To ask a question, please use the chat box or simply post a comment in the comment section below. Thank you for joining us today. We're super excited to have a great session. So let us go ahead and bring JP and Bill Marin up. Hi, JP. Thank you for joining us from Cheyenne.
Yeah, absolutely. Thanks for having me.
Fantastic. And Bill, thank you as always, my friend, for coming in. Shall we go ahead and dive right into the mortgage rate updates, please?
Yeah, so the market opened up a bit positive today from what was in the news yesterday. Looks like rates are pretty good. Not really a ton of movement today. We are in a position to carefully float, not recommending anybody lock if they don't need to right now. If you're looking like you're closing 30 days or more out, I recommend just floating throughout the day and then kind of watch the news and see what happens.
Okay, so I appreciate that update. So if you're saying that you don't recommend anybody locking today, are you forecasting there's going to be a dip in the interest rates then?
No, there always could be. When there's a news week with the real estate market, there could be positive swings and negative swings when it comes to interest rates. Now, guys that I follow and what they recommend usually is spot on with why they recommend it. Today, we are getting a recommendation like most of the time right now. If you're not closing within 30 days, it's safe to float. If it changes and you're in a different position where we're getting a recommendation to lock, an alert to lock, that means a rate increase is imminent. We don't really know when rates are going to drop, but we typically can forecast what's coming up and when they're going to go up. So kind of.
Okay, so that's sound advice, and thank you for letting us know what mortgage interest rates are doing. So in short, it sounds like, hey, if you don't have to lock right now, float it out a little bit, get with your loan officer that you're working with, and play the cards on that so that we can get you the best rate. Would that be a correct assessment?
Yep, absolutely.
Okay, fantastic. So what mortgage market updates do you have for us? Anything new or progressive that we're hearing about that's been mainstream media or, fear mongers that are out there that we need to discuss to be able to get the truth out?
No, so I think a lot of the fear mongers, like we like to call them, because that is what it is, right? It's clickbait, it's all those different things. But there is things that have changed. There is things that with a lot of the bigger banks, there is guidelines that have totally eliminated whole sections of mortgages being able to approve them and close. Guidelines have tightened up a lot with lenders across the board, but there is still a lot of options out there for people to be able to lend. The primary thing that every lender is looking at right now, Andrew, is going to be the probability of continued employment, because
right,
if somebody's not working right now and they're in contract to close on a house within the next 30 days, depending on where you're at in the country and what's going on locally with your local government, you may or may not be back to work in time before you close. So that is the primary thing that we're looking at, and every lender's looking at across the country, is probability of continued employment or when you're going to be going back to work. The second thing, I know we've been talking about this a lot, is in regards to the minimum credit scores.
Hold up. I'm going to do one of those Bill Marins. Hold up, right? Hold up.
Yeah.
Hey. Right. Sorry, JP. Bill is always doing that. We're talking on the phone or something. He's like, Andrew, hold up. So I'm going to say, hold up. Let's go into, you said a lot right there, and there was a mouthful. We want to go ahead and do that. And it looks like your image quality is getting a little bit better. So that's great too, because you're starting to look like a water cooler painting there or not a water cooler, but water paint. What do you call those? You have kids, Bill. What do you call them? JP?
Watercolor.
Oh, perfect. So yeah, watercolor. That's what I was going for. So thanks, JP, for the save on that. So Bill, with that mouthful that you're saying, why not start out with why lenders are not lending, which is today's hot topic. And I know that I know that doesn't apply universally, but we have seen a lot of the big banks tighten up those lending requirements. And specifically, as you started to mention a moment ago, before we dive into some of the FICO score and down payment changes, let's dive into first, why are these big banks fearful of making loans or originating loans to would-be homebuyers right now?
Well, I mean, it kind of piggybacks on what I was starting to say about the probability of continued employment, because one of the challenges that the big lenders, the small lenders, everybody across the board is looking at is the whole topic of forbearance. Because even though somebody may not necessarily need or should be in that bucket of doing a mortgage forbearance, a lot of people are trying to do it, and that puts lenders in a very bad position if you're closing on a loan and then you don't get a mortgage payment for the next 3 or 4 or 5, 6 months. So that is one of the things, especially with big banks, especially with depositories. Well, they have a lot of other things to worry about, a lot of other concerns. One of the bigger reasons why they're either halting, closing certain loans altogether, or just really tightening up those guidelines on that aspect. So, yeah, I hope that answers the question, Andrew. But I mean,
it does a bit, because it sounds like, and please correct me if I'm mistaken here, Bill, it does sound like it's coming down to the sheer job security purposes, especially as we see like unemployment claims rising up over 22 million right now across the United States. I mean, job security is paramount to anybody, first and foremost, buying, in my humble opinion. If you're concerned about your employment situation, if there's something that's not, the security is not there, then realistically, you should not be buying a house right now until those issues are resolved. We need to make sure that people are taken care of before we go out there and help them buy a house, because the last thing I think JP, myself, or you, Bill, would like to see happen to anybody is they buy a house and 12 months later, I mean, they're essentially in either a short sale or foreclosure territory. That's not cool, and that hurts people. And real estate done right will advance you in life, but real estate done wrong will set you back a decade or more. So when we're talking about job security, and specifically more to the point, the unemployment rate, Friday's episode, I have a wonderful agent from Florida coming on. Her and her husband have a major brokerage in Miami with over 450 agents. And we were talking over the weekend about something called the V curve, and that we're going to dive into a lot more. The reason I mentioned this as it pertains to unemployment is right now we're seeing a massive spike of unemployment claims going out, right, which is understandable. But the question I keep raising here is, how many of those people that are requesting unemployment or filing unemployment claims right now are in fact furloughed, not laid off, not fired, meaning they're going to go back to work whenever some of these restrictions lift, or as coronavirus passes and runs its course, so to speak, right? And I think that's really important to take stock of, because the numbers up front are scary. They're fearful. They're salacious. That's why they trump up those numbers, in my opinion. No pun intended, obviously. But I mean, that's why people inflate those numbers, go to that type of rhetoric, is fear sells, unfortunately. And me, fear is false evidence appearing real. And we need to go the hashtag beyond fear. We need to move beyond that false evidence appearing real into the facts. And we're talking about facts and unemployment. We need to understand how many on a percentage basis that are filing for unemployment claims are in fact furloughed people, because they're going to go back to work. Yeah. And you're going to see the sharp V going back to like a V curve. You go, whoop, and then you go back down really rapidly. And now it's like, oh, our unemployment is back to where it was approximately when we began the year. So, I mean, obviously I don't have a crystal ball. I'm not like some whatever, right? I'm not, what do you call them? Psychics, right? So I'm not a psychic, but I'm somebody that watches facts and numbers. So that's why I wanted to bring that up, and I appreciate you touching it.
Yeah, Andrew, that's a phenomenal point, man. JP, if you have anything to add, man, on that is one of the biggest things that's just kind of a misconception, if you will, about unemployment right now is kind of unprecedented. This is absolutely it is crazy right now, right? With the unemployment rates, if you look at it that way, but if you take a step back, just take a breath and just sit there and just look, okay, really truly what's going on. Most of these people are not laid. Most of these people are not fired. Their job has not been eliminated. Position has not been eliminated. They will be going back to work, most of them. And when that does happen, you're right, Andrew. I mean, that's a great way to put it, that V curve. I'm excited to see that video on Friday, but that is, that's what's going to happen in most cases. Obviously, some people are different, but in most cases that will happen. And there will be a drastic decline in the rate of unemployment. And people will get back to work, and the country will start just doing what it was doing before, maybe even bigger and better. So JP, if you got anything to add, man, I mean, you're up there in a little bit different side of the country than us. Let us know, man.
Yeah. So, one of the things with the unemployment numbers is that you've got 1099 employees that are part of that number, now, which wouldn't have been part of that number if this hadn't happened.
Yeah.
So the numbers are skewed. If you're 1099 and you're not working, you weren't working anyways, and so you wouldn't have been able to apply for unemployment. But because of the situation we're in right now, those numbers are skewed, and so you're part of a calculation that's completely inaccurate. So I think, looking at it through a crystal ball, if you will, we're going to see a boom and a bust all in 1 year. I mean, you're just going to see boom, boom, and then we're going to be back to, life as we know it, and so, the biggest thing too is I think a lot of employers didn't get the word on the PPP early enough. And when they did find out, we were out of money. Because I was just reading yesterday that it was literally almost 2 weeks to the day that they ran out of money. So, and because they kept changing the process. So it was like confusing in the beginning. And then, so you're a week out, and then all of a sudden, now that they kind of had all the processes smoothed out, people that had gotten their applications in and then didn't realize they were in wrong, they had to go back and redo them. Because the IRS was kicking them back. And so there's, I just got the National Association of Realtors just put out a bulletin yesterday that they're in talks of another round of funding, but they're not opening up the application process yet because they've already got all these applications they're working on right now in the queue. So it's kind of like, if you didn't get in on the first 2 rounds, you're kind of, back to just observing what's going on. And so, I think some of the information that was getting put out there was confusing. So it's like, oh, it's PPP, but EIDL, the disaster relief was also part of the same amount of the same funds. When they originally rolled it out, it seemed like EIDL was different from PPP. And then now and so there was some confusion on that. And then it was like, okay, well, where do we go to apply? And then they're like, no, you don't go to the IRS website, you go to your local bank. And so just the information rollout was just pretty disjointed. And so honestly, if you subscribe to some YouTube channels like this one, you can get your information a lot faster and probably more accurate than trying to go to the news websites, because they're just trying to throw it out there as, with little to no information, just so they can get, people to go to their website, so. Oh, exactly. And on the lending real quick. One of the, like in our area, we have such low inventory, it's obscene, because we have 60,000 people in our little town, and we have just a little over 300 houses on the market right now, and tons of buyers. And so I think what's the positive effect is that it's thinning the herd of buyers. And so the ones that were like on the borderline of qualifying anyways are now out.
Yes.
So the multiple offers and the just the fanatical amounts of traffic have slowed down, which is kind of a positive reaction to the quarantine. It's like, well, you should be at home anyways. So, I mean, if you're not really a solid buyer, stay home, stay safe, so.
I think those are great points, and it's important to put in context, obviously, locations where in Clark County, as we were talking about, Las Vegas area, essentially over 2 million people reside here. And you were saying in your area in Cheyenne, Wyoming, the biggest city in Wyoming, 60,000 people with 80,000 people in total residents in just the county, right? Which is numerous in your neck of the woods. So I think it's really interesting when you compare market stats to areas and help put in the context of an overall situation. Now, Bill, I want to go ahead and go over into what you were probably wanting to say next, which were those FICO score and down payment changes before we start getting ready to go into viewer Q&A. And for anyone that's just tuning in now, thank you for joining us. At the initial part of the live stream, we were talking about, obviously, why aren't lenders lending? We went into unemployment and some job security situations that are really good information. And for everyone watching live right now, again, thank you for being here. Bill, let's go ahead and hook up this FICO score changes and the down payment changes, please.
Yeah, so there's across the board, every lender that I know of, we are a mortgage banker. So we're a true seller servicer, meaning we service our own loans. You close your loan with us. Like Andrew, as you know, then you usually make your payments to us, right? Which is great. So you have a little bit of flexibility. A lot of lenders out there are like that. Some are not. So there is across the board, from what we've seen, FICO increases as far as minimum credit score requirements to close loans. We require a minimum of a 620. I've heard of one other company that's a 600, but they want you to have 12 months reserves in the bank and a lot of different stuff that's going on, and the rates are just, not fun. But there is some options for people with that. Now, depending on what type of loan program you're talking about, conventional and VA, conventional financing is, when it comes to closing those types of loans, it is FICO driven. When it comes to your interest rate and your PMI, which is your mortgage insurance for putting down less than 20%, the programs are still out there. We do a ton of them. But when you get below like a 680 credit score and you're trying to do a conventional loan with 3% down or 5% down, the PMI and the rate is not going to be too sexy. The good news is we still can do the deal. A lot of lenders out there can. But when you get back down into below a 620, you get down to between a 600 to 620 or below a 600, which normally we could close those transactions. Right now, we cannot. Most lenders out there cannot and are not going to do any of those types of loans because the risk is just too high right now within that bucket. Now, I do believe it will come back. I do believe that within the next few months, for sure we'll be able to do that again. But as of right now, across the board, I haven't seen anybody really truly closing a lot of transactions under a 620. Now, anybody watching this video live, or whether you're watching it, today or whenever you're watching this video, if you're in a situation like that, your biggest resource, if your lender is telling that you're currently working with, is your real estate agent. Hopefully you have a professional real estate agent you can go to them and talk to them. Don't go on Google and just try to do your own research, right? And see what you can find and ask your cousins or friends or whoever. Go to your real estate professional, because that's how they make a living. Hopefully you're working with a professional real estate agent, and they can guide you and show you maybe a couple different options of lenders to talk to. Now, I have heard, Andrew, I know you and I were talking about this, man, was the down payment assistance programs. There's some lenders out there who just totally just cut those off. They're not doing any down payment assistance at all. But there are lenders out there who are still doing them. So again, go to Realtor, get a referral to a lender. If you need one, you can always reach out to myself as well, and we can get you a referral. The other thing is jumbo loans, like we talked about yesterday. I know we went into a deep dive on that, but any loan
on Monday. Today's Wednesday.
Long night, my friend. So any loan amount above $510,400 across the country is going to be considered a jumbo loan in most areas. Those have gotten very tight as well. So again, I think the biggest thing to take away from this, anybody that's watching, if you're being told no, don't take that as an end all be all, right? If it's just the first no you've gotten, reach out, see if you can find some different options and see what you can come up with. But guidelines across the board have changed.
Fantastic. Appreciate that. And that is, again, why we do the live stream format 3 times a week, and are very fortunate to have you in as Bill on Monday and Wednesday, so we can keep track of all of these lending changes and how the economy is shaping up and affect the world of both real estate, like JP is here with us to give us additional perspective, and loans at the same time. So thank both of you gentlemen. So before we get into viewer Q&A, I do want to let everyone know JP is awesome and one of our great subscribers and part of our community, which, by the way, remember, hashtag your vibe attracts your tribe, right? We need to come up with our tribe name. I mean, we're like coming up on 19,000 people in our community. We need we need a name for our tribe people. So let's find out what that is going to be. And if you have some ideas, I posted on the YouTube community section yesterday, just asking for different suggestions or thoughts on that. But that said, part of your vibe attracting your tribe is how we met JP today, JP Fluellen. And that's because of Pug Love in April and her positive energy and asking, hey, Andrew, I'm thinking about moving to Wyoming. And I would like to hear from a top agent in Wyoming on your show. So I contacted JP over the weekend because of that. And we enjoyed a wonderful conversation. There's a whole story behind his 33% up there. There's a lot of fun stuff he's got going. And to show you some of the fun stuff he has going, let me just show you that he does have a YouTube channel. If you would like to subscribe to his YouTube channel, please feel free to do so. The link is in the show more description. He also has a very robust Instagram and growing Instagram account so that you can see the different posts and different fun and happiness and some just for trying to make you laugh in lean times type situations, right? And more seriously to the point, like Pug Love in April, if you're looking for a home, again, his links are in the show in the description. Then go over to his Titan Real Estate Team website and discover what you can get in Cheyenne, Wyoming for homes. There's a lot of helpful information here and resources. So, JP, thank you so much for joining us, my friend. I really, really appreciate you coming on today, and I'm excited to get into it.
Cool.
He's like, okay, I don't know where I'm supposed to go with that. So let's go ahead and get into it. Let's go ahead and get into it. So Pug Love in April, obviously we were just jabbering about you. Thank you, my friend, for being here. She was the first comment. She zooms in, I think, minutes early when she gets the notification. And I love you for it, Pug Love in April. By the way, tonight is Finance Night with Bill Marin on the Real Estate, The Untold Stories with the Hernandez family, airing at 5:30 p.m. Pacific. It's an episode of the home loan application process for anyone that wants to see what it's truly like to apply for a mortgage. Anyways, Pug Love in April. Hello, hello. Hope you are well today. Super excited for this episode. I've got my notebook and pen ready to take notes. So if you'd like to join us on the screen, you know that I always say it. The description on both Facebook and YouTube is a link. If you want to come up and really have a really strong engagement with JP here, or if you're just more comfortable asking questions in the chat, please do it so that we can put your pen and notebook to work. So Drew's Enthused says, yo, hope you're well. Hey, Drew's, hope you're well too. Thank you for being here, my friend. AJF1, morning, everyone. Thank you again. And I appreciate your suggestion yesterday. I have now learned who is behind the AJF1. So for his privacy, I will not reveal his name. But at the same time, he did make another wonderful suggestion that I'll be reaching out to another top agent in a different state and seeing if they would like to join us on screen too. So thank you for the suggestions. If anyone has suggestions, by the way, just let me know. My goal is to be fully aligned with our community, with our tribe, and make sure that we're giving you what you want. Meseret Binti, thank you again for being here. Meseret says, good morning. I need a lender to buy a condo for my primary residence with 20% down, and I have reserves of 6 months. Can I get a loan? And then down below that, Bill, by the way, I'm a taxi driver in Las Vegas. Thoughts?
Sweet. That's what I was going to ask. So, Meseret. So, yes, you should be able to. Go ahead. My information is in the description below if you want to look on that there. There is, so again, as a taxi driver, you got to look at your job and see kind of what's been going on. If you're not furloughed, if you're still working, if you're still getting rides, if you're still getting paid, and you're not furloughed, then you definitely have a very good shot of getting approved. Even if you are furloughed, what I am suggesting to everybody that's in that situation, if you are furloughed and you're not working, you're not getting paid, you cannot close right now in this moment. But what I would suggest is to get the process started. Complete a loan application. Let's get all that done. Let's look at the credit, see what their kind of challenges you got going on there. If nothing, great, rock on. But we can get all the I's dotted, T's crossed, get you through underwriting, get you actually fully approved, just waiting for you to maybe go back to a normal work situation. And then when it comes to a condo, buying the condo as a primary residence, it does depend on the individual condo community. with 20% down on a conventional loan, should be relatively simple to do that. But we definitely need to look at the specific condo that you're wanting to buy to make sure there's not any pending litigation. There's not any major issues with that individual unit that you're wanting to purchase. So I hope that helps, Meseret. But I've done a lot of loans for guys and gals that drive taxis. So if you have any questions or you want to chat more about it, definitely reach out to me in the description. It's got all my information there.
Thanks, Bill. Greatly appreciated. So Kyle Walker, thank you for joining us again, my friend. It's great to hear from you. Kyle says, my wife and our closing, essentially would be better just maybe said, our closing date keeps getting pushed back due to bank delays, now May 15th. We are having our first baby due on June 3rd. If baby comes early, this could negatively affect our mortgage approval. Could this negatively affect our mortgage approval? Bill?
It depends. I feel you though. My wife and I moved this last year and decided to do that right as we were having our fourth baby. So it's fun times. It's an adventure, my friend Kyle. You're in for some fun stuff, but it depends on the approval process. So with your wife, what does she do for work? Are you using her income to qualify? You want to ask yourself that. If she is, maybe she's working tips and that's a majority of her income and she's no longer going to be working, that could affect your approval. If you're just using your income, no, my friend, you should still be fine. That would be definitely something to kind of deep dive in, maybe offline on the phone and chat about. But all in all, man, congratulations. Having kids is awesome. It's good times, especially buying a house at the same time.
two major life milestones all at the same time. Are you an overachiever, Kyle? We support you. We're here for you. Claudia Alexa, thank you for joining us, my friend. Claudia says, good morning. Thanks for all the info, guys. We certainly appreciate your positive energy and want to send you positive mojo back, my friend. Thank you for joining in. Bob Woodhouse, good morning, friends. Good morning, Bob, my friend. It is great to hear from you and super happy that you're taking place or that you're joining us today. Kyle Walker says, thanks, JP, for mentioning 1099 employees. I'm a partial W-2, partial 1099 employee, and it seems hard for my lender to understand how our lifestyles and income operate. Luckily, I'm currently making money.
Cool.
Just keep on making money, man. I mean, that's the name of the game right now is just stay employed and stay alive is kind of the big one right now. And, and if it's coming down to buying a house, do that when you can.
Yeah.
Mm-hmm. It's got to make sense in life. And that's something that Bill and I talked about in JP. Maybe you feel the same way about this. Real estate to me isn't about selling anybody anything. It's really about advising people and helping them make sense of where they are in life and to the reality of the market conditions. And whether it's a good time or not based upon the reasons that are important to them. So going back to what we were sharing earlier in the stream, if you have a concern about a pending furlough situation or job security concern, then now is not the time to buy. But if you have job security and you're confident that your security is there, let's say that you're like a doctor, you're in the medical profession, or you're in a service industry that's really not impacted all that much by coronavirus. Because, if we have 20 major sectors of the economy that are operating realistically right now, I believe about 4 of our sectors are impacted. So, that leaves 16 other sectors that there's a lot of us employed within that could buy if we have the job security and the comfort level. Ultimately, at the end of the day, it has to be at a timing and place that is comfortable to you and your life for the reasons that are important to you. I just want to highlight that because it really comes down to your clarity of why you're buying and your comfort level at the time that you're doing it. Okay, so Pug Love in April, thank you. JP, you are freaking me out with those numbers. Ugh.
Yeah, okay. So it's all relative. I hear your concerns, but there's a phenomenon that happens in the real estate world that when you're ready to look for houses, the right house is always available. And so, it's if you're really, really, truly wanting to purchase up here, I can tell you, I moved here from the DC area back in 2007. And, the beauty of where we live is that we get all the joys of living in Wyoming, the hunting, fishing, the scenery, just like the sun, the antelope and all of that, those good times. But the best part is that we're only an hour and a half from Denver. And so if you want all the Denver lifestyle stuff, you can either drive an hour in Denver or you can drive an hour to Denver. It's the same. So, and so the beauty is that we can, get all of the, amusement parks and, when it opens, and all the downtown restaurants, the high-end shopping, all that stuff, Cherry Creek Mall, you get all the sports teams and all of that if you're into sports. And then we get the beauty of living in Wyoming because we don't have any state tax here. Real estate taxes are super cheap, less than 1% for sales tax here, or for real estate tax. So I mean, I sold a house to a guy from California, and he was like, he thought that the taxes were a joke when I told him how much he was going to pay on a $600,000 house he bought up here, and I was like $3,200. What? And I was like, yeah. And he's like, that doesn't make sense, And so when I explained it to him, he was just like, I'll take it. I'm not going to argue with you. Even if you're wrong, I'm still not going to argue with you, because even if it's half of that, or whatever, he's just like, I'm going to go with it. So yeah. And so he's just been really enjoying it up here. And so, if you're looking to make a move and you really, really, truly want to have the best of all the worlds, I mean, we're right on 2 interstates here. So I-25 and I-90. So, it's really nice for access. And we're literally, Fort Collins is a cool place, and it's only 30 minutes from here. And that's in just north of Colorado, in northern Colorado. And they have a lot of cool stuff down there too. So, so I've been here 13 years and I don't plan on going anywhere. So, choices. We all got choices to make.
Choices. Love it. And I appreciate those insights. That's powerful. And, it's one of the fun things about streaming with agents from around the country is just hearing like differences of everything. I would have never known, had I not gone to Google and myself, how long it would take to get from Cheyenne to Denver, for reference. And that's pretty interesting. You can live the higher quality of life, more affordable life in Cheyenne. But if you wanted that big city feel, it's completely reasonable to drive an hour and a half. I mean, heck, we do that in Vegas from one end of the town to the other, sometimes depending on traffic alone. I mean, just from one side, if you're up here in Northwest Las Vegas where I am, and I got to go to the Henderson, or as I like to call it, Hindertucky, because it feels like I'm driving to Kentucky by the time I get there, then it can be realistically over an hour just to get to that side of town. And we never left Clark County.
Yeah.
So it's pretty interesting hearing like that change of pace and everything. So thank you for the insight and the descriptiveness with like the antelopes and nature and everything. That's beautiful. I was visualizing, when you said that. I think it's very descriptive. So Meseret Binti says he has a credit score of 717, Bill. So Meseret, sounds like you might want to hit up Bill directly. Again, his information is in the show more description below. And just for reference, if it's easier for you to remember, BillMarrenLoans.com is his direct URL, his website. And Marren is spelled Merren. Pretty easy to find him. If you just type Bill Marren into Google, there is a lot of links to Mr. Marren. Lindsay Turner. Well, we know you, Lindsay. Thank you for joining in, Lindsay. Today is day. Yes, today is day. I have no idea what that means, Lindsay, but today is day, yes. So thank you for being here, Lindsay. I love you a long time. Lindsay is one of our great title officers. You may have seen her in the Seller reality show for Real Estate, The Untold Stories. She gave some information about Stewart Title Company, which she belongs to. Super positive energy, super amazing lady, and it's great that you're here. Pug Love in April says, Andrew, come on now, cut Bill some slack. He's quarantined with kids. Understood.
Thank you.
So, yeah. So Bill and I actually rib each other quite a bit. It's just, maybe we could have a comedy show of how much, flack he and I give each other, but it's really out of like brotherly love, because Bill and I, there's that saying that as an iron sharpens an iron, so a friend sharpens a friend. So he and I are always keeping each other on point. And to me, it's just like, this is who I am and this is Bill, and we give each other a hard time, but it's all fun at the end of the day and we have each other's back. But understood. I'll cut him some slack for looking like a watercolor painting early in the stream. So then Pug Love in April says, started following on IG, referring to you, JP, and we'll hit you up on your YouTube channel after this stream, and we'll definitely be heading to your website too. Thank you, Pug Love in April. I'm glad that you had the opportunity to meet JP through this stream, and you're in the really good hands with him.
I've been doing this a minute. I think I got it figured out.
What's that?
I said I've been doing real estate for a minute, so I think I got it figured out.
Well, one of the good things. Go ahead, Bill. Sorry,
Andrew. JP, how long you been in real estate, man?
I got into I started off as an investor in 2006.
Oh wow. Okay.
And, did that for up until 2010, and then I got my real estate license.
Nice.
It's kind of just a natural progression. You get into it and you're like, hey, and this was back. So our crash didn't hit Cheyenne until about 2010. And about 30% of our market was foreclosures at that time.
Wow.
Pretty nuts. But the values didn't change much. I mean, we were only hit by a 13% adjustment. So, so the values didn't get hit too hard. The difficult part of it, the whole thing for us here is a lot of Air Force, because we have an Air Force base here.
Yeah.
And, you know, and this is kind of just a plug for veterans to really analyze that VA loan before you actually use it. Because if your market is volatile and, you know, a VA loan may not be the best fit, even though that's what they like hammer. Do a VA, you're military, you deserve it, use a VA. Well, a lot of times they don't tell you that, you know, if you go in with the whole money, no money down, that you're upside down for 2 years. And so, so it's always, you know, just analyze the numbers, you know, and just, you know, look at the long-term, you know, effects of some of the options that are out there, because a different loan type may be a better option. So you just, you know, always make sure that I'm a veteran myself. I was in the military for 13 years. And
what branch?
I was in the Army National Guard for 13 years, did a 1-year tour overseas, and, you know, back during Operation Iraqi Freedom.
Nice.
So.
Well, thank you for your service. Bill's actually former Army, and I'm former Marine Corps myself.
Oh, nice.
So I spent almost a couple of years in that dirt over there, back at the tip of the spear, right after September 11th happened, and boom! Somehow I managed to get from Okinawa, Japan, to the United States just in time to do some training, and poof! I was like, "There's nothing here. There's just like desert, you know, camel spiders, and like, you know, digging." You know, a bed in dirt and trying to keep, you know, your airways clean because there's so much darn hoobobs or, you know, whatever coming at you with all the darn dirt. Look like a freaking wall of dirt. But that's a different story. Another conversation, another day. All the same. Thank you for your service, my friend. So Zoondog 31, Zoondog, thank you for being here. He says, hey, fellas. Thanks for doing this. How important is job history and length of employment, specifically for a conventional loan? Is under 2 years still acceptable post-COVID? Bill?
So post-COVID, I don't know. I mean, things are going to be different for a short time. I mean, I guess we all don't know what post-COVID is going to be, but it depends on your situation with why haven't you been working for 2 years? Were you in college before? Are you younger? Maybe you were living at home, didn't have to work. It just depends on your situation. So and it depends on what type of job you have. If you're self-employed and you haven't been doing it for 2 years, then no, you're going to probably have to hang tight and wait until you're at that 2-year mark. If you are a hourly or especially a salaried employee, you should still be able to proceed with buying a house. And I hear this all the time, Andrew. I know you and I've talked about it, but the big thing when it comes to, a lot of people think you have to be in the same job for 2 years to qualify. Simply not the case. The big thing you don't want to do is change from being I see this a lot in some of our higher end buyers, but they go from being a doctor that you're working for say you're on a W-2 type situation at a hospital. They go from that situation to opening up their own practice and becoming their own entity, their own business. They might be making a lot more money in that avenue, but they went from being W-2'd at maybe salary, multiple six-figure type job to now you're self-employed, you're going to have to wait in most cases until you have at least a year, more than likely 2 years under your belt. Same thing when it goes from like being, if you're a, say like you are just an hourly employee working somewhere, you have a salaried position at a casino. Well, you go from that to working at a bar and you start making great income on tips. In order to use those tips, you need to have at least 1 year on the job so you can see what that income looks like. And same thing vice versa. If you go from, we see a lot of people in Vegas that go from being a bartender to all of a sudden to a salary type position, more than likely we can use the salaried income to help you qualify for a house. So again, just like every scenario, it really does depend on your situation. So I would say talk to your loan officer, but you definitely still have a chance to qualify with less than 2 years on the job.
Good stuff, Bill. Thank you for that. And it just goes back to the importance of understanding. And I know that you and I tried to get the word out. I'm sure JP and his team do too. The reality behind like mortgage interest rates, the reality behind loan qualification stuff really come down to an individual level of one's own economic position and financial ability more than anything. These rates that we see that are out there, I hate them. As you and I have discussed, I hate it. I hate it. I hate it. And I'm going to say it again. I hate it because it's deceitful. You're like, hey, get a loan for 2%. But then you click that asterisk. Oh, if you have an 800 credit score, putting down 25% and you're doing a 3-to-1 adjustable rate mortgage right there, you lost most people. Like, what the heck is any of that? Right? It's deceitful. To me, it's deceitful. It should just be like, hey, you know what? We're happy to help out. Ultimately, the rates are good right now. This is kind of where they're hovering. Depending on how good your credits, your debt to income situation is and your overall economic profile will ultimately determine what kind of rate that you can get in conjunction with the loan type and program that you're utilizing. So, I mean, maybe that's a verbose way of saying something, but look, at the end of the day, it's the real way. And I just prefer to get truth out there. And that's why, 4 years ago, I started this YouTube channel. And as our community continues to grow, I hope that we will continue sharing or, our community will share the content around so that we can, highlight the truth. Because this process doesn't have to be scary. I hear those trigger words like hidden fees or hidden this or hidden that. In reality, there's nothing hidden. If you're working with the right people and people are just being straight. And that's the purpose of, I know like my counterpart, Matt Layton in Arlington, Virginia, that makes a lot of wonderful consumer videos as well on his YouTube channel, try to just expose the truth and get it out there. So I really appreciate you sharing that and your insights on that. Micah says, I wholeheartedly agree with asking a professional instead of asking Google. I thought there was no way I could afford a house per mortgage calculators. Then I asked a lender and the real bleep were much lower.
True story. All the time, every day.
It kind of just piggybacks perfectly onto what we were just talking about. Yeah. So when in doubt, the best thing ever is just to apply for your mortgage. Even if you have bad credit and everything else, if you really want to get some stuff sorted and you want to be able to go into home buying territory within 1 to 2 years, you get with a mortgage loan officer, let them look at what's going on. They can give you a definitive game plan of roughly how long it's going to take and what steps to take to boost that score. And it's all legit. So, I mean, Bill and I've worked with some people for 2 and 3 years to help them rebound their credit scores. And then when they end up buying their house, they're super, super excited. So it's just a matter of process and knowing that we're here to help. Judy Marie, thank you for joining us, Judy. Judy says, in early March, my husband and I were pre-approved for a loan to buy a home in Texas. I'm a nurse and I am working in Illinois and I have a job offer in Texas, but my husband is currently furloughed, continued below. Okay, thank you for that. My husband is currently furloughed and both of our credit scores are in the mid 700s. And we are in a position to be able to put 20% down on a house. Is it likely that we will be able to close on a loan given our current situation? Bill?
So if you're planning on closing on the loan before your husband goes back to work, you would need to qualify with just your income alone. If you qualify, Judy, with your nursing income alone from your new position, what you're going to go do there in Texas, if you qualify with that, absolutely. If you need your husband's income to qualify for the loan, no. He's going to have to go back to work. He's going to at least have to have a start date. Now, again, just just, tune into this channel for changes and things that are coming up, because things are changing once the country really truly starts fully going back to work and opening up and everybody's going back to their jobs, and a lot of the furloughed employees start getting start dates. Who knows? Guidelines might loosen up a little bit. But as of right now, if you need your husband's income to qualify, more than likely not. You're not going to be able to close before he goes back to work.
Thank you for that. But obviously she's a nurse, so if they didn't need it, then it sounded like she could still materialize that purchase, correct?
Absolutely.
As long as they don't need his income is what it comes down to.
Yeah, and with her new position, again, just depends on what lender you're working with. You probably have a contract. Most nurses that I've worked with and helped out, they have contracts to where they'll show exactly what they're going to get paid. As long as you qualify with whatever the base income is on that contract, then the lender should be able to use what that new income is going to be.
Good stuff. Good stuff. Thank you. Meseret Binti says, okay, I will contact you. Thank you. So Bill, heads up, Meseret's going to be reaching out. Pug Love in April. This is directed right at you, my friend JP. Says, JP, is Wyoming a lawyer state? Something that you and I were talking about. According to my research, what is the average length of time for a home closing? What time of year is best to buy? Hoping to buy late next year, but may wait until early 2022. So JP, take it away, my friend, because there's several questions there.
So Pug Love in April, here's the deal. So Wyoming is not a lawyer state. All of our contracts are drafted by a guild of attorneys, and the real estate agents are just allowed to make the offers accordingly. And all the closings, we don't have a lot of the contingencies. So like a lot of states have, it's contingent upon the disclosures, and it's contingent upon each phase of the contract has different contingencies, and then both parties have to release those contingencies. We're just not that way. I mean, it's still wild, wild west in Wyoming. So our real estate process is just, we have a license, and they feel that we're, as licensees, we're confident and competent enough to formulate those contracts and just negotiate those between the parties, and then we're able to close. The average length of time for closings in a perfect world, 30 days or just slightly less, 27 to 30 days, we can typically close. Right now, in a COVID environment, our only hangups right now is the length of time it takes to get appraisers out. So that's what determines our ability to close. In some cases, in special circumstances, we can close in 10 days. If you go in and get all of your pre-approval stuff done and get pre-underwritten, essentially you've gone through all the process except having an offer written on a property and under contract. You can usually close in 10, 15 days if you really wanted to. Mm-hmm. And then in terms of what time of year is best to purchase, the time that you're ready is the time that you should buy. I mean, timing the market is like trying to time the stock market. Like you got to follow. You just gotta when you're ready, that's when you need to purchase. Because there's pros and cons to different times of the year. Honestly, the time that works best with your timing is the best time to purchase. Because houses are coming on and off the market all the time, and Cheyenne is on at least up until COVID, we were on probably the beginning to probably our second or third year in a huge growth cycle, like where the cost of the markets were going, the prices of homes were just continuing to rise. So, I've seen those cycles last 5 to 7 years. So you just need to, it's always best to just jump in when you're ready.
I think that's a really good point, JP. And the reason I wanted to touch on that too is because it comes down into my brain, right? Because you got to remember, all of us had a former life. All of us have served our country honorably, and that's, again, awesome. But part of what I went to night school when I had the rare opportunity to do it when I was active duty was to become an accountant. And there's all these economic principles and courses that you take of how to read different things, and obviously the numbers that go into accounting. Where I'm going with this is there's a principle of what's called time value money. And when you look at the principle of time value money and you look at when realistically from a logical standpoint, if one was highly analytical and wanted to delve numbers, you got to understand time value money here at Pug 11 April. And what that means is if you were financially able to buy and you were comfortable to buy, back to JP and all of our point that it needs to be the right time in your life for the reasons that point to you, number one. But number two, if you were trying to time a market, right? You need to understand what is that market doing? What makes the market tick? TIC, trends and indicators and conditions. Is the trend line going up on home appreciation? Is the trend line going down? Is the trend line going about the same, right? Because what's not going to stay the same in one of these variable set of equations here is also your mortgage interest rate. So if you have an appreciating home market and you have interest rates that are getting higher, your what's called now your purchasing power parity, essentially PPI or PPP in this case, and PPP being your purchasing power parity or your purchasing power index, right? Means that the higher the interest rate, the higher the home value, the lower your pre-approval is going to be at the end of the day, because the interest rate takes a toll on the amount of money that you can go forward with on what's called your debt to income ratio. So I don't mean to get like super nerd or anything here, but I am one. So call it, what was it that I say? You call a spade, Bill, but my new one is every coin has three sides and the truth resides in the middle, right? Well, the truth about me is I'm a nerd. So there you have it. So, that said, though, I hope that does make sense, because before I do get like super nerd and either get up on a whiteboard, right, which there is one in my office right over there, just know that there are real considerations that impact how much home loan you can get approved for. And ultimately, the JP's point, the very simple version of it, is when the time's right in your life and it makes sense to you, he'll be there to step in and help out if you do choose to call Cheyenne your new home. So Drew's enthused. Yeah, I saw your comment a minute ago, my friend, and now I'm kind of intrigued, to be honest. So Drew says, back to working on the house. Keep it up, guys, because Drew just closed on his new home lot 2 or 3 weeks ago, I think. So he says, hey, I just put out a couple of new videos if anyone gets bored later. Well, what's your channel name, Drews? How did we know where to go? So the next time you're back, you got to let us know what your channel is and what it's about. And that'd be pretty cool to check out, because who knows, you might be providing value in a whole different way to help people that they would appreciate knowing what your channel is called. So I don't know if it's just Drew's Enthused. I would probably just start there and see if I could find you on YouTube doing that. Anyways, Farhana Ahmed says, good morning, Andrew and team. Thanks for sharing all the information and educating us. I really appreciate you, and we really appreciate you, Farhana, for being here. Thank you. Kyle Walker says, both of us are teachers, and luckily she has to only provide one virtual classroom lesson per week, so she technically doesn't even need to take maternity leave. Our income currently is secure. Number one, thank you for being teachers and educating the tomorrow's leaders and the young minds of today. And I'm glad to hear that your income is secure. So thoughts, Bill, JP?
Yeah, I mean, teachers' income is very secure, at least here in Clark County. I know they're still getting paid. They're still working their butts off, working virtually, which is probably just as much fun as all the moms and dads are having doing homeschool. But yeah, and I think, Kyle, I remember on one of our previous streams, you were commenting and said that you do something with virtual tours and all that. You can use both incomes as well, just as long as that income is still going on. But we'd have to kind of take that as it comes when you're ready to close. And, by June, hopefully things are kind of more back to normal and you're still doing those virtual tours.
Perfect. Pug 11 April says, yes, Cheyenne is where I'm trying to go. Fantastic. JP is there to help. And Pug 11 April then says, oh, I'm familiar with the Denver area. I just came from there. Fantastic. That's awesome. Morris D says, hello, guys. Good to see you again. Do you bring cash during the closing for a down payment? Winky face. Well, we're going to give you a winky face on that one too. Bill, go ahead.
Please don't. If you bring cash to the closing table, like literally you bring cash or anything like that can't be sourced and seized. So it's part of the Patriot Act. After all the changes and things that happened after 9/11, we have to source and seize, and all money's coming in and out of an account. If there's anything in an account, depending on the loan program you're doing, how many months of bank statements are required. If there is money that is not part of your normal payroll, I'm talking Vegas, very common. You win $1,500 playing blackjack, and you go and throw that $1,500 of cash in your bank account. Mr. Loan Officer is going to ask you, hey, where'd that $1,500 come from? So cash is kind of like a 4-letter word when it comes to closing on a transaction. Now,
and it's not king in this case.
If you're paying cash, completely house, rock on, man, more power to you. But if you're closing on a loan, if you're financing the house, I guess I should have clarified. If you're using financing, traditional FHA, conventional VA financing on a home, and you have a lot of cash you're wanting to use for your down payment or closing costs, whatever may have you, you want to bring that up to your loan officer immediately in the very beginning. There might be some workarounds and things they can come up with and help you figure out. But please don't bring that to the table when you're ready to close, thinking you can use that money, because you can't. Very important. We've had it.
We have, and we typically just like to call this mattress money because you might have the money in your mattress, to older school phrase, I suppose. So in short, your money needs to be in your bank account, whether you're buying cash or whether you're using traditional financing, because in either case, title companies need to receive a wire of those funds. Yeah. In many cases, especially for your closing funds, because it's normally a large dollar amount depending on your program, has to be wired. So it's a very important thing because of that Patriot Act, as Bill referenced earlier. The money has to be seasoned, has to be sourced. So please note. But Morris D then asked, can you explain how a closing goes? Do you need a lawyer for that, or a buyer broker is enough? And that's a great question. And just before Bill gets into it, or JP dives on this, just to let you know, I have made several videos about the closing process for home buyers and home sellers. So as opposed to me answering, gentlemen.
JP.
Yeah. So basically the funds get wired to at least. So it's a little bit different in different states. Let me just preface this. Some states you close at an escrow office. In some states you close at a title company. And depending on that process. So like I've had friends that have bought houses in California, and they actually have title as separate from escrow, which is never heard of that. So I was like, okay. But where I'm from in Wyoming, so this is for Pug Love in April, when you come back up here and we purchase a home, it's pretty straightforward. Your funds get wired to the title company. The title company has a closing process. They get you a settlement statement that basically balances out both the buy side and the sell side of that property. And you have your closing documentation along with all of your lending documentations. And then sometimes each title company has their own little internal paperwork that you have to sign, saying that they're a third party and that they're not part of the transaction. They're just here to facilitate closing. And then depending on, pre-COVID, post-COVID, we used to be able to bring cashier's checks to closing. And I think they're all really kind of pushing wires now for closings, because it's more secure and smoother, and there's just less moving pieces. And then depending on what state you're in, usually the attorney just ratifies the contract. They don't actually ever show up to closing. But right now, like in Wyoming, because of the environment we're in right now, they're doing literally curbside closings. It's ridiculous. Like they're literally coming up with a mask and gloves on a clipboard. Here, sign your docs. They sign it right there, and they're like, here's your keys, and you drive away. So because they want to have less people, touching and breathing the same air. And I think something that's going to be birthed out of all of this is going to be virtual closings.
Yeah.
You're literally just going to be at home. You're going to e-sign everything like in a Zoom meeting. And there's going to be some disclosures that basically state that you've had ample time to review all of your documentation, and you're just going to click a few buttons. And, the only part of that is probably your buyer broker that you're working with will probably just meet you at the property. Here's the keys. Have a great day. So it'll be an interesting evolution to see what happens out of all of this, because I think, with all the technologies we have out there, blockchain and all these other things, there's so many ways to make all of this so secure and authentic that the days of physical signatures are probably going to be few and far between after all this is over. Because even in Wyoming, I've had title companies tell me, we're not going to go there. We're not going to, digital signatures and have that be real. But because we can't be in the same room together, they're allowing digital closings right now because they have to. They don't have a choice. And so it'll be very interesting to see how much of this sticks around or how much of it was just due to, the current environment. But literally it's, old school closing was just you sit across from the title officer, sign the paperwork, you pass it across, they explain each page to you, you sign it, and then here's your keys. And then, depending on if closing gifts are customary in your state or not, or gift card or whatever at closing, and then everybody, high fives and gets all excited and takes a couple pictures for posting it on social, and then there you go, you're done.
Yeah. So, I mean, that's a very big bird's eye overview, and I certainly appreciate it. So, yeah, I mean, when we're talking about virtual and digital, I mean, that's something that Bill and I have been doing for years. And Lindsay Turner was on earlier, who works at Stewart Title. I mean, we've done virtual transactions with people out of state. We've done virtual transactions with people out of country. So long before COVID was a thing, we've been doing it. So it really was about the needs of the client and what needed to happen. So it's just now where, like the gentleman, Jesse Dow from Living in Portland YouTube channel on Monday was saying, they were, talking about video stuff. And Bill and I were like, well, here in Vegas, we've been hustling that video game for about 5 years.
Yeah.
Before there was the platform, Bill was over there. He's like, Andrew, I just sent this video. I took an MP4 off my phone and I just texted it over. And, it's just about customer service and being there for people. But going back to the closing, Morris D, there's in addition to those videos I mentioned earlier about going deep on the closing process of a home buyer and the documents you can be expected to sign in detail. When we get to, I believe it's episode 12, so about 10 more weeks into the future for the current home buying reality show, you're actually going to see what a closing looks like. And you're going to hear it directly from an escrow officer here in Las Vegas about every document that you could be expected to sign and what those documents essentially detail. And that's a big part of the reality show, was to showcase real estate for what it is. No fear. Remember, hashtag beyond fear, right? No false evidence appearing real here. Which means no drama, no hype, no BS. It's all legit, and it's all the real processes that goes down every day of the week across the country. So keep your, if you haven't yet jumped on that, Morris, I would suggest jumping on that series, especially if you're early on in the home buying process. Zoondog says, thank you, Bill. I went from studying history in college to a W-2 salary job at a defense contractor, sitting at 14 months here, and it's the only potential holdup I can think of.
No, you should be good. Yeah, you absolutely should be fine, because what the employers or what the lenders more likely going to do is they're going to look at that college history as job history. So you should be fine, especially because it is salary. They'll more likely use that salary income as well to qualify. They won't hit you. They shouldn't hit you with a 24-month average on that either. Be prepared. One thing they might ask for is they might want, more than likely, they're gonna want college transcripts. They're gonna want to make sure that you were in fact in school, that you did graduate, that you were actually pursuing something that led to potentially getting your job. So yeah, you should be fine.
Good stuff. Good stuff. Thank you. Micah says, I am working toward getting a loan, and my W-2s look like I worked for 2 different companies for more than 2 years, or less than 2 years, sorry, each, when in reality is that we were acquired in 2018. Is that going to be an obstacle at all?
No, we see this happen all the time. So just be upfront with the lender, make sure they understand that, make sure the lender knows and has a paper trail of the date specifically when things were changed over, and you should be totally fine. As long as your pay structure didn't change, like I said before, as long as you didn't go from like W-2 to hourly or salary to all of a sudden you're a straight commission guy, as long as your pay structure stayed the same, you should be totally fine.
Good stuff. Thanks. And then Micah wanted to chime in, whenever I went bleep earlier. So Micah, thank you for letting us know that you weren't swearing. I ran out of 200 character limit. Dollar numbers meant dollar numbers. Yeah. Glasses and too far from the screen, maybe. So I'm getting old, I think is what it is. I need some more powerful glasses. But all the same, I normally see that. I'm like, oh, okay, cool. Comedy. So, but thank you for letting us know, Micah, that wasn't the case and that you were just referring to the dollar numbers. Thank you. And great questions, by the way, today. Monica Edman says, I currently have a conditional approval with just a few additional documents needed. Do you think there will be any changes to FHA that may affect my closing?
Absolutely. There could be changes with your lender because, like I said, a lot of lenders guidelines have tightened up. Minimum credit scores have increased. There could be, absolutely. There definitely could be things that may affect your closing. So communication is key. I think throughout this entire history of doing this live stream, Andrew, you and I, one thing that I keep hammering down is just communication is key with everybody, not just your realtor, but especially once you're in contract, meaning you have an offer accepted and you're now working on your loan approval. Communication with your lender is absolutely crucial. You want to pick up the phone and call them, make sure the guidelines haven't changed. More likely they have. Even though they have, are you still good to go? So that's something I would definitely reach out and find out.
Thank you, Bill.
Yeah, I was going to say, correct me if I'm wrong, but if your pre-approval starts reaching that 60-day limit and you're in transition, make sure you have access to your documentation. That's because I just ran into this issue. We with some buyers of mine, we ended up we made 3 offers. We had 3 different houses under contract, and then they were making the last house, and it was with Chase, and they had just changed all their qualifications. And so they needed to provide all brand new documentation right in the middle of our under contract. So, if you're in transition or if you're doing temporary housing somewhere, make sure you got easy access to all of that original documentation when you first got approved, because you may have to provide new documentation. So it could put you in a bind, especially if something was in a box and it's in storage and you don't have a digital copy of something, and, or you have to call your old employer because you got a new job in the middle of all this happening and they locked up your access, and now you got to call HR and you got to do all these things. So make sure you have access to all of these things to kind of prepare yourself ahead of time so you're not stuck in a bind, especially when you're like, we're still trying to close right now, actually. So it's been a fun ride, but it would have been probably a lot smoother and a lot less stressful if the lender, gives them a heads up on all that documentation too. So.
Good stuff. Thank you for those insights. And Monica, thank you for joining us today, my friend. It's great that you're here, and thank you for the great question. Judy Judy says, thank you for answering my question, and thank you for these videos. Well, thank you, my friend, for being here, Judy. It's great to hear from you. And yes, that's the purpose of going live. And today we're honored to be with our friend in Cheyenne, Wyoming, JP Fluellen. So it's great that we can put this out there and have the opportunity to do this together. Thank you. Zoondog says, is it worth it to enroll in group legal through work? How much involvement do lawyers have in the buying process? Would it be worth the $180 a year to sign up? I'm located in Virginia. So Zoondog, one thing I would suggest, my friend, and is that you chat with my good friend Matt Layton out of Arlington, Virginia. Get boned up on the home buying process in Virginia. And make sure that whatever he suggests to you, he is a top performing agent in Arlington and does have his own YouTube channel. It can be found at the Matt Layton. Tremendous gentleman. And if you wanted to hit me up directly and you want me to make a warm intro for you, I'm happy to do that. Just my contact information at this point is kind of everywhere. So just hit me up and I could do that for you too. So that being said, I would prefer to let Matt really delve down into that for attorney to non-attorney states. I mean, realistically, the majority of the United States are not attorney states. But for those that are attorney states, the process does take a little bit of a different form. But as JP mentioned earlier, they're essentially just verifying everything is legit and putting their stamp of approval on it, and then collecting a portion of their commission, or collecting their commission on signing it off and saying everything is good to go. I think that's a big reason why we don't have more attorneys involved in the transactions. To become a licensee, there is a lot of education and a lot of ongoing education to make things happen. So that said, Zoondog, please contact the Matt Layton in Arlington, Virginia, and he'll be happy to give you all the information about how real estate works in his state. Pug 11 April, back to JP. JP said, Pug 11 April says, JP, what does it mean when a listing says there's no HOA, but covenants are in place?
Yeah, so that's a very good question. So basically, the way I like to put it is covenants are poor man's HOA. Basically, it's a way to put some restrictions on a neighborhood with nobody really governing what's going on. So it's an interesting, basically they're legal documents that are there, but there's actually nobody there to actually enforce them. And so what ends up happening with covenants is if somebody were to break the covenants, typically in neighborhood, an attorney's not going to hear the complaint unless there's a majority complaint. And then the community has to, or the individual has to litigate. And then in order to enforce somebody breaking the covenants, and then what ends up happening is then an investigation goes in to see if anybody else is breaking any other covenants in the neighborhood. And then eventually what ends up happening is the person that made the complaint realizes how expensive it ends up being. And so a lot of times they're just there until they kind of go out. So like brand new neighborhoods, when they still have like an architectural committee, the people that actually created the covenants are kind of there as the unofficial presidents of the covenants. And then, but it just becomes a super complicated process after that. So essentially it's just documents saying these are the rules. If you break them, there is a possibility that you could go down this other path. With an HOA, however, there is somebody that's actively participating in the rules of the neighborhood. And so they are the go-to person. And typically with HOAs, and I've seen this just once, there is a fee associated with that, whether it's monthly or it's a yearly fee or every 6 months, just depending on how the HOA is set up. And then they actually have a president that's going to, as they're driving the neighborhood, they're keeping their eyes open to see who's violating the covenants. And then they have a process of how they send you a letter and they stick it on your door and tell you what's going on. Every once in a while, you'll run into a non-paid HOA, which is basically that the developer lives in your neighborhood, essentially. And they're the ones that are the self-appointed presidents for that time being. And then they become the quote unquote Nazi of the neighborhood. And so it just really depends on, how crazy the covenants are. Some of them, there's loose covenants. There's super crazy restricted covenants. There's loose HOAs. There's super strict HOAs. It just, the best thing to do is the house that you're buying is to get some insights from the seller, and they can give you an idea of how the HOA actually is. And then you can usually make an informed decision from there on whether that neighborhood is good to go or not. So that's kind of
that was brilliant information, by the way, JP, and thank you for that. That was it's hysterical at one point when I started just about falling out of my chair laughing, was because I was thinking how you said earlier in the stream that Cheyenne's kind of like the Wild Wild West. I was like, yeah, if you got developers that are self-appointing themselves to an HOA that may or may not yet exist or does not exist, but yet still rule the development, that's pretty interesting business. Because in Vegas, everything is boom. HOAs are filed with the state. They're a nonprofit organization. There are minutes. There's rules to be followed. There's everything is broken down. And in the state of Nevada, a buyer has to receive a copy of the covenants, codes, and restrictions and has 5 days right of rescission by Nevada state law to comply or not, as a contingency of a contract. So it's interesting. And that's why, again, I love the perspective of differences in real estate around the country, and really appreciate your insights on that. But one thing, Pug Love in April and JP, I'm really curious to see what you think of this. Normally, whenever I work with buyers here in Vegas, or in most cases, people ask me about HOAs at large, I just say, hey, why not drive the community? And just know that, to your point, when you talk about looser and stricter HOAs, absolutely true, I think, of every part of the country. What you can see when you drive through the community of an HOA is probably what you can realistically expect. If everybody has weeds, then weeds are kind of like the thing in that community. And they love it, they endorse it, they support it, and they're voting for a weed for president tomorrow. I don't know. You know? It is what it is. Now, maybe you can have a good time, right?
Right. Well, in Colorado, that's a thing, so.
Yeah, it is true, right? Colorado and the yeah. I gotta remember your proximity to
Sometimes some of that stuff bleeds over here too. So, whether you want weeds in your ditch or across borders, I guess.
Right. So ultimately, you could drive the communities and see which ones are stricter or which ones not. If you don't see a weed anywhere in the neighborhood, then weeds aren't cool there. So the other thing you can do, in addition to what JP was saying, with gleaning insight from the trusted real estate advisor, JP in this case, if you decide to go ahead and head over to Cheyenne, is to also get to know some of the neighbors in the area, which I normally suggest anyways is good practice. Just to scout the neighborhood and area. Now, obviously, a city has 60,000, a little bit different, because in a single zip code, we have 60,000 or more, in most cases, people in a single zip code. And we got over 52 zip codes proper in just the Las Vegas Valley area at large. So, I mean, big city, small city. So, but all the same, tight knit. And the rules apply no matter where you are. So that's what I was saying, JP. Would you agree with that as a general practice across the board, is to drive it, fill it out, make sure you're comfortable with it. And if you find a neighbor out, say hello.
Yeah. I always tell people, because we get a lot of buyers that come up here looking for no covenants, which you're 30 minutes outside of Cheyenne, and some people, for us here, that's far, but so we have the conversation of, well, if there is a property that you like, and if you want no covenants, there actually may be a neighborhood that every single person, or at least half of them in that neighborhood, have already violated all the covenants. So go and it's really easy. We can send out links to neighborhoods with the CC&Rs, so they can.
Oh, wow.
So we can just send them a link. They can look it up. They can read it, and they can drive that neighborhood and see how many people are violating the covenants, and then they can say, yeah, it looks like everybody hasn't abided by any of this stuff, so we're good. Let's go ahead and make an offer. So it's
fantastic
mentality.
Thank you for the powerful insights there, and that was fun. You had me laughing on the weed part, so that was very hilarious. So Zeke, I see that, and thank you for joining us today, my friend, and your great questions. So I see a few, so let me get through all of his, Bill, before, I know you got to go in like 10 minutes essentially. But before you do, let's see if we can knock out a couple of these lending questions if we can. And Zeke says, hi, question from California. I've been rate shopping for a 15-year rate and term refinance. I currently have a 30-year fixed at 3.625 and am looking to take advantage of these low rates. The problem I'm having with some lenders is that they are setting loan requirements. For example, they want the loan amount to be a certain price in order to offer the low rates. Is that a normal lending practice? Basically, they're asking me to cash out in order to meet their requirements.
So, great question. A couple things going on there. The first thing is you're switching. Now you got to look at the reason why you're refinancing. You always got to ask yourself, why am I refinancing? Am I just shopping for a lower rate, lower payment, just wanting to lower my monthly expenses? Or am I truly wanting to save tens of thousands of dollars by switching from a 30-year fixed to a 15-year, because you're going to pay it off sooner, pay tens of thousands less in interest more than likely, depending on your loan amount. So the big thing there is when you're looking at rates are very, very important. But if you are strictly wanting to switch from a 30 to a 15 to save a lot of money in the long run, rate shouldn't be as big of a factor, because again, your whole reason for refinancing, it sounds like, might be to go from a 30 to a 15 and save tens of thousands, right? That's a huge, huge deal to do. When it comes to the lenders having what we call, because there's different buckets of credit scores, but there's a lot of other things as well when it comes to pricing out a loan, which is lender terms. Pricing out a loan is when we determine what your rate's going to be. There's a lot of factors that come into play. The type of loan, obviously, it sounds like it's going to be conventional potentially, but a conventional loan, a 30-year versus a 15-year, that's going to change the rate. Typically, the rates are a little bit better on a 15-year. Now, credit score comes into play as well, but also the big, big thing on that too is when you get into the lower loan amounts, you have some pretty big hits to the interest rate, meaning to get a loan done just in general, it could be a 0.5 point hit depending on how low your loan amount is. So they're not going to force you to do a cash out refinance, of course, but it is very normal. If you're getting under 100,000, I mean, shoot, maybe even under 50,000, then absolutely there's going to be hits to that interest rate. You're not going to get as sexy of a rate that you would have had if your loan amount was higher. So it's very normal. You're not doing anything shady. Again, I would, if you're happy and you're confident with what your lender is telling you, by all means, have them break it down to you. Maybe do like a Zoom conference call. They can show you some things online and kind of explain it. If you're not happy with them, you don't feel like they're being truthful with you, seek out a second opinion. You know what I mean?
Speaking of a second opinion, though, Bill, on this, I am going to plug you here because I know you're licensed in California. Yeah. So, Zeke, if you want to know how this works and you want to Bill to review your situation with you and potentially work with him on your refinance, Bill is licensed in California and Nevada. So if you're talking about a second opinion, that's who I go to. He did my own personal loan too. So just saying. Anyways, sorry. Yeah. I had to jump in and let people know you are licensed in several states.
Yeah, thank you. Andrew, thanks for the shameless plug, man. But for me, I am licensed. I am a loan officer here in Nevada. We have a multi-state lending team that literally any state across the country that we need to get financing done to help people, I can help. But again, if you want a second opinion, I would be more than happy to help Zeke. But that sounds pretty normal. If you have a very low loan amount, that sounds like it's standard practice.
And you saw his last comment here is just in case you need this, the loan to value is debt to income ratio is great. FICO is awesome, but they're still asking you to buy down.
Yeah. It's all about the loan amount. It sounds like you have a low loan amount. And if you do, that's probably normal. But, shoot me a call, shoot me a text, and I'd be happy to chat with you about it.
Cool. Zeke, thanks again for joining us, my friend, and for your excellent questions. Megorium, hey. What's up, friends? Happy Wednesday. Megorium, thank you for joining us, my friend. Love your positive mojo, and I hope you're enjoying a beautiful day. Queenie X, because I believe this was one of our yeah, I'm just scrolling real quick here. Okay, yeah, I wanted to try to get this next lending question in before Bill has to bounce off to get back into his meetings. Queenie X says, my husband quit his miserable job and didn't have any income for 6 months last year, but our assets are sufficient and now he is working. Will this be a problem?
Depends on what type of job he had, Queenie X. So it depends on what type of job he had. If he had a regular hourly employment situation, like most of us have, right? Most people out there have a regular hourly situation. Then yeah, it could potentially cause a problem because more than likely the lender's going to take a 24-month average of income, and that could lower the purchasing capability if the income is lower because of that large gap of employment. Now, if that lower income average is still going to work, and now he's back at work and it's been a little bit, great, you should be fine. But more than likely, they are going to hit the income with an average. Now, if he's a salaried guy, then should be totally fine. If he's a salaried position now, totally fine. But if he's hourly, it's going to hit his average income for sure.
Good. Thank you for that. And Bill, this will be fun for you. One last thing. Okay. Megorium says, Bill, can you tell us one of your worst lending stories you have ever experienced? Tells from the dark side of home loans.
Oh my gosh, there is a few, you know.
Yes. A
There's some
couple of
fun
them together.
ones. I literally had a guy crying one time. We were at the very end of the transaction. Great guy, veteran. We became friends, and he did everything I told him to do except for one small thing. The brother went out and bought a brand new Corvette because his loan was approved, and we got to clear to close, and he thought because we had to clear to close, it meant he can go out and buy his dream car. That dream car happened to it was $115,000, beautiful, beautiful Corvette. He purchased it. During the process, I didn't find out till the very end, and I had to call him back, and I had to tell him, "Hey, man, it looks like you got a $1,300 car payment." Came out of nowhere. This throws your debt to income ratios out of whack. He goes, "Well, was that going to be a problem?" I said, "Do you want to live in your car or do you want a house?" So, literally, the guy's dream car. Veteran, respect him a ton to this day. He was dang near in tears when I told him, "You're going to have to take a $15,000 bath on this car, return it, pay them because now it's less in value." Long story short, he returned the car. He had to eat a little bit on it. He closed on the house. He went back and got the car, and he sent me a funny little video from that. So kind of funny, kind of a funny story, but things do happen. There's been situations too where people have done that. And unfortunately, it was things that could not be reversed. They co-signed on student loans. And I had to tell a family that was literally against my advice and my realtor that I was working with, their advice to not drive to our wonderful city with your entire family and household it up until your loan is closed. They did that anyways. They co-signed for a bunch of student loans. The deal was dead. I had to call them and tell them that I'm sorry, but you cannot close on your home. So there is things that happen. It's never fun to talk about that, which is why we try to put out all the good information that we do. And just super, super important to make sure you're working with a professional who's got the experience or who at least is surrounding themselves with people who's got that experience. So I hope they make you laugh a little bit, but it's not always sunshine and rainbows in the end. So
it's not, and I think that's what McGorian was getting to. So I mean, it was cool that it was something that was eligible with the veteran that you mentioned in the Corvette story. All too often, though, people do think that right before they get ready to close, and I've said it many times in different home buying videos I've created, is to the point exactly. Either you're going to choose to live in that Corvette, or you're going to choose, if it's within a possibility, to take the darn thing back and have a house, so that with the house, you can actually park a vehicle in the garage. So, I mean, that's where importance comes into play, and the communication comes into play, and the different things that we reiterate, because we have both had clients that did not listen, unfortunately. And I'm sure JP has as well, because you don't make it to being a top performing agent without this happening to you at least a handful of times. Yeah. And people will be people, and you can't control them. You give them the do's and don'ts of a home loan. You give them the do's and don'ts of a home buying process. And all of a sudden, they go and buy a brand new $15,000 Sub-Zero refrigerator, and it kills their debt to income ratio, their loan to value, everything's done. They find themselves unable to take it back. Boom, poof, done. And at that point in the contract, there is no excuse. Earnest money deposit's gone right along with it. So when we share these things with you, the dark side of real estate in that case is if you make a bonehead mistake, or you do something that's boneheaded and not advised, there's a bonehead price to be paid for it. And ultimately, we as trusted real estate advisors and loan officers are trying to help you be safe. And there's rules, there's a process to this thing called real estate, no matter where you are in the country. And it's the process, that needs to be followed to make you successful and ensure your safety. So Bill, I know you got to bounce, dude. Really, really appreciate you, my friend, for joining in. And everybody, Bill will be back with us next Monday and Wednesday at 9 a.m. Pacific. Next Monday, we'll be talking about wire fraud. So very real topic. It's something that we need to talk about. So Bill, thank you, my friend, for being here.
Thanks, Andrew. JP, nice to meet you, man. Look forward to hearing the story behind your hat.
Yeah, we got a few minutes. I have to jump on another call here too. So
yep.
But I can jump into that story right now if you want.
Yeah, go ahead, because we've been streaming live for an hour and a half, and we have a lot of wonderful engagement. So if we didn't make it to your question, just post it in the comments, and then we'll go ahead and make that happen for you, because JP, I know that you were telling me your wife is a psychologist or psychiatrist rather, and she's doing a really big mastermind session to help people.
Yep.
But yeah, tell us the story behind that 33%, because that was pretty fun when we were talking about it earlier.
Yeah. So I was at another brokerage. It's been almost 2 years now. And I decided that, it was time to make a change. And I had, grown a real estate team, had a real estate team fall apart, and then try to put another one together. And I was going through these growing pains because I had more leads than I knew where to give them. And so I had done some research. I read a book called The Millionaire Real Estate Team and by Chris Waters. And Chris reached out to me and basically said, "Hey man, we don't have anybody that's, working with us up in Wyoming. Tell us about your team." And I told him about my team, and he's like, "Dude, you're in what we call a isolated market. We love those because you have no outside competition." And I was like, okay, this is intriguing. I haven't heard anybody say this before. And he's like, "We can get you 30% market share in 2 years." Well, I'm like, okay, well, I live in this market. I know that's not possible, but I'm still intrigued by how aggressive he was. And so, I was tossing around, and one of the big kicker was for me. He's like, "But you have to pay me 8%." And I was like, "I'm already paying 6%. Why would I pay you 8?" So I was like, okay. I said, all right, I need to go back and reevaluate a few things. And so, I went back and finally, landed with EXP Realty up here, and decided that it was in my best interest to make that move. I had I was like a month into my transition, and I had an agent from my previous brokerage come join my team, and very quickly we ended up with 4 or 5 agents within the first couple months. And she's like, so I told her, she's like, "Well, tell me about your story." And I told her the story about the 30%. And she's like, "Well, why 30%? Why not do 33%? Because that's a third. That's at least something that you can explain better, And so it's kind of our internal, motivator that we're trying to get a third of the market share. But really what it comes down to is we want to help our community and be a part of a third of the transactions that happen within our community, because we feel like that's how we can make the best impact, is to be a part of at least a third of those transactions, so that people can understand where we're coming from, what we're all about, how we can impact them in our community that way. So that's kind of where it came from.
That's fantastic. And I appreciate you sharing that. And just out of curiosity, given that Cheyenne, Wyoming is comprised of 60,000 residents, right?
Mm-hmm.
What does your monthly listing inventory look like on an average basis? If you look at your last 12 months, how many homes are available for sale on a monthly basis on average?
We average anywhere between 400 to 480 houses a month.
That's pretty respectable. And how many of them close every month?
We sell anywhere between 250 to 350 a month. So
oh, wow.
That many coming on and off the market all the time. So
that's pretty cool. That's pretty cool. That's why I was asking, when you talk about 33% market share, I mean, obviously it's a huge number. So when anybody's talking about small business or growing business or growth mindset, 33% is huge, of any amount. And the reason I was asking, I was thinking to myself, in Vegas, if you look back on the last 12-month run, on average, we're closing, not homes for sale, closing 5,000 homes a month.
Yeah.
A month. So if you were like 33%, 1,500, over 1,500, oh my God, what kind of shoot, you got to have a strong support team to do that. And a lot of agents that are like-minded and everything else that make something like that happen, because that's a lot.
It's aggressive.
We know what goes into just one real estate transaction, being a purchase or a sale or new construction or what have you. Multiplying that out by personality type and everything else, and then by 1,500, or even in your case, like 33% of 500, I mean 156 essentially, or somewhere around there, 165. that's huge. So keep us posted on how that works for you, though. I mean, that's highly aggressive, and I'm going to give you the positive mojo. I think that if we apply ourselves with positive mojo and we do daily affirmations and we bring the love, we bring the joy, we bring the hope to every interaction that we have directly or indirectly together, we are always stronger and better together than we are not. And when we work together, we can make dreams happen. We can reach those goals, but it takes a team to make that dream, right? What's that saying? The dream work, right? Help me with this. Teamwork makes the dream work. Boom. Yes. I'm so used to stronger and better together, right? Hashtag beyond fear, hashtag stronger and better together. But the true positive mojo is where it's at. And the truth, the honesty and integrity and bringing love and joy to every conversation is how we grow things together, and how we overcome where we're at right now in the world is by coming together as people and focusing on those things that make us alike, and building off of that foundation going up. So 233% positive mojo going, my friend. Do keep in touch, and you're welcome back on the show anytime, my friend. And I know we will be keeping in touch for a long time to come yet. So everybody, thank you for being here today. It has been a tremendous opportunity to be streaming live with JP Fluellen today out of Cheyenne, Wyoming. Really wonderful time at Pug Love. And April, again, thank you for the suggestion of reaching out to an agent in Wyoming. If anyone else has a suggestion of a state they would like to see next that has not yet come on, please let me know. And in the meantime, again, thank you for being here. We'll see you back on Friday with Denora Guerrera, Miami, Florida, when we talk about the V curve. That's going to be interesting. It's going to get deep. So tune back at 9 a.m. Pacific time. For now, wishing everyone a beautiful day. And please go out there and be the reason someone smiles today. Thank you. See you soon.